Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news that despite the Trump-generated spectacle of intimidation and violence in Los Angeles against immigrant communities, the economic news has been constrained. This coming week is not a big one for local data releases, but in Australia we'll get updated surveys of both consumer and business sentiment. Not a lot of changes expected in either, though. And there will be a June update of American consumer sentiment from the widely watched University of Michigan. And we'll get CPI updates for May from both the US, where we expect a small 2.5% rate, and China, where we expect a deeper deflation at 0.2%. India will also release May CPI data and expect little change there. The Chinese will also release export and import data, Japan will update its machine tool order data, and Germany will release some wholesale price data. Over the weekend, and in something of a relief, the US May non-farm payrolls growth came in at 139,000, a little different from the expected 130,000, and only a minor retreat from the 147,000 growth in April. But that is a bit below the average for 2024 and well below the average for 2023, and the lowest expansion for a May since 2020. In data not seasonally adjusted, it was the lowest since 2016. The US labour market seems to be plateauing after a rather strong recovery in the prior 4 years. And average US weekly earnings rose 3.9% in May from the same month a year ago, similar to the earlier 2025 months, and the same as the average for a May over the past 10 years. The jobless rate was unchanged at 4.2% there. But hiring freezes and production cutbacks seem to be the themes coming out of corporate America. The landscape for reshoring isn't good, apparently. And the data is becoming clearer that foreigners are avoiding the US as a travel destination, and not just Canadians, with anti-American sentiment on the rise in Europe too. Companies like Airbnb, Booking.com and Expedia all said that their financial results will be weaker than expected because of the softening demand. And total US consumer credit rose by $18 billion in April, or up 4.3%, from a $10 billion increase in March, and better than expected. So this expansion, while modest, is back to normal pace. Revolving credit, that is credit for credit cards, increased at an annual rate of 7%, while non-revolving credit, for things like car loans and others, personal loans, rose at a lesser rate of 3.3%. There was May Canadian labour market data out over the weekend too. Somewhat surprisingly, that delivered an expansion of 8,800 jobs when a 15,000 reduction was anticipated. Even better, they had 57,700 new full-time jobs in May, balanced by a reduction of 48,000 part-time jobs. So overall, a rather surprising net gain. However, their jobless rate rose to 7%, the first time it has hit that level since 2016, apart from the pandemic. So that probably raises the chance of a rate cut at their next review at the end of July. In Japan, the level of central bank bond tapering continues to raise concerns and undermine demand by other potential investors. It is also raising questions about the value of the yen. There is elevated debate about the right level from here, and the central bank may have to slow its tapering operation. The void their tapering is leaving is not being filled by the private sector, and that could seriously twist Japanese interest rates. Late on Friday, the Indian central bank cut its policy rate again with an outsized 50 basis point cut to 5.5%, when a 25 basis point trim was expected. That makes it a full 100 basis point reduction since February. They say the outsized move was required by the combination of fast easing inflation and ongoing uncertainty surrounding global trade tensions. And the Russian central bank also surprised with a rate cut when one wasn't expected. It cut 100 basis points to 20% under Kremlin pressure and claiming that inflation is under control. EU retail sales for April came in surprisingly strong. They report these on a volume basis and were 2.8% higher than April 2024. Only a 1.4% expansion was expected, and the March expansion was 1.9%. So a great result for them. Most other countries are not getting inflation-adjusted retail growth anything like this. And we should note that today is a public holiday in Australia, so our markets will be rather quiet. Meanwhile, both sides seem to be gearing up for trade talks between China and the US in London. The US Treasury 10-year yield is now at 4.51% and unchanged from Saturday, but up 9 basis points for the week. And the price of gold will start today at $3,308 an ounce, down $10 from Saturday. American oil prices are holding at just on $64.50 a barrel, while the international Brent price is still the same at just on $66.50 a barrel. And the Kiwi dollar is now at 60.2 US cents and unchanged from Saturday at this time. Against the Aussie, but also unchanged at 92.7 Australian cents. Against the euro, we're still at 52.8 euro cents. That all means our trade-weighted index starts today at just on 68.2 and unchanged from Saturday. And the Bitcoin price starts today at $106,270 and up 1.5% from Saturday. But volatility of the past 24 hours has been low, at just on plus or minus 0.6%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.